So, have you ever been called for jury duty? It's a cornerstone of our justice system, but what most people don't realize is that the little check the court gives you can create a surprisingly sticky tax problem, especially if your job keeps paying your salary. Okay, let's dive right in and solve this puzzle for the 2025 tax year. Here's our game plan. We're going to start with the paradox itself, being taxed on money you don't even keep. Then, we'll walk through the IRS solution, which is called the Schedule 1 wash. After that, we'll uncover a hidden payroll tax trap, look at the employer and state rules that cause this whole thing, and wrap it all up with an audit-proof checklist for you. All right, so let's get right into the central issue. A lot of companies have what's called a make-whole policy. It means they'll keep paying your regular salary while you're serving on a jury. But there's a catch. You have to turn over any money you get from the court. Seems fair, right? Well, this is exactly where the tax headache begins. So you have to wonder, right? Could doing your civic duty, even when you follow all the rules, actually end up costing you money? Without filing your taxes just right, the answer is, surprisingly, yes. You could absolutely end up paying tax on income that just passed right through your hands. This shows you exactly how the money moves and where the problem starts. First, the court pays you. Second, your employer pays your regular paycheck. And third, you give that money from the court straight to your employer. The whole problem is that the IRS sees steps 1 and 2 as two completely separate income events. And the legal reason for this is a tax principle called the Constructive Receipt Doctrine. It sounds fancy, but all it really means is that the moment that court check has your name on it and you could cash it, the IRS considers it your taxable income. It doesn't matter one bit that your company policy says you have to hand it over. As far as the taxman is concerned, you received it. Period. Okay, so that's the problem. But don't worry, the IRS actually has a pretty elegant solution for this exact situation. It all happens on one specific tax form, Schedule 1 of your Form 1040. This is how you create what we call a wash transaction. The tool the IRS gives us for this is a really special kind of deduction called an above-the-line deduction. Now, this is awesome because it directly lowers your adjusted gross income, or AGI, which is a big deal. And the best part? You could take this deduction even if you take the standard deduction, which is what the vast majority of people do these days. So, how do you actually fill out the form? It's a super simple two-step process, all on Schedule 1. First, in Part 1 on line 8H, you report the jury duty pay as income. Then in Part 2 on line 24A, you deduct the exact same amount that you gave to your employer. The income gets added in, the deduction subtracts it right back out, and the net effect on your income is 0. It's a perfect wash. Now, here is a really critical heads up for the 2025 tax year. You might hear some buzz about a new form, Schedule 1-A, which has some new deductions. So listen closely. The jury duty pay deduction is not on that new form. It's still on the classic Schedule 1, right on line 24A, where it's always been. Don't mix those two up. But just when you think you've got it all figured out, there's a complication. While we've completely neutralized the income tax problem, there's another tax that isn't fixed. Payroll tax. And this creates a subtle but permanent loss of money we call the FICA Trap. Let's just compare these side by side. The income tax, as we just saw, is a wash. You're good there. But payroll taxes, FICA, which is Social Security and Medicare, that's a totally different story. You see, you pay FICA taxes on your full salary from your employer, but the money from the court is not subject to FICA. So when you hand that court money back, you're essentially refunding your employer with dollars that you've already paid payroll taxes on. So what does this look like in real money? Let's say you gave your employer $250 in court fees. Since you don't get a refund on that 7.65% FICA tax, you've basically overpaid by $19.12. Now look, it's not a huge amount, but it's your money and it's just gone. And here's the toughest part. For most people, this small loss is simply unavoidable. There is literally no line on your tax return to claim this specific overpayment back. And while your employer could technically file a bunch of complex paperwork to correct it, most won't because it's just too much of an administrative burden. So why does this complicated system even exist in the first place? Well, the answer really lies in this messy patchwork of federal, state, and company rules. You see, the Federal Fair Labor Standards Act doesn't actually require your employer to pay you for jury duty time at all. That leaves everything up to the states and individual company policies. And believe me, the state laws are all over the map. For instance, in a state like Alabama, the law requires employers to pay your usual compensation, which is what leads to this fee surrender policy. But then you look at Texas, where there's no payment required at all, so it's all up to your employer.
Then you have places like California, where some government employees can use a special waiver to bypass this whole issue. It really just shows that your situation depends entirely on where you live and work.
Now, some employers use a much cleaner method called differential pay. Instead of paying your full salary and having you give money back, they just pay you the difference between your salary and your jury fees. You keep the court check, report it as income, and that's it, no deduction needed. It's way simpler, but honestly, it's a lot less common.
Okay, let's bring this all home with a simple, actionable checklist to make sure you get this right and stay completely audit-proof.
I want you to think of this as your audit defense file. You need 4 key things. 1, the official statement from the court showing what they paid you. 2, proof that you paid your employer back, like a copy of the check or just a letter from HR confirming they got it. 3, a copy of your company's official jury duty policy. And 4, your pay stubs from that time. If you have these 4 documents, you are absolutely golden.
Okay, one final but very important warning for a specific group of taxpayers. If you file using Form 1040-NR as a non-resident alien, the IRS instructions are crystal clear. You are not allowed to claim this jury duty pay deduction on line 24A. This is mainly because generally only U.S. citizens are called for jury duty, so the situation really shouldn't even come up.
So, to wrap it all up, serving on a jury is your civic duty, but it definitely comes with a tax twist. By using the Schedule 1 wash, you can make sure you don't pay income tax on money you never actually kept. So the question I'll leave you with is this. You've already given your time. Are you going to let a simple tax mistake make you pay for it a second time?